If every headline makes you want to buy, sell, or panic, you're not alone. The market is loud. It feels like every day there's a new opportunity you missing or a new disaster you need to escape. All that flashing red and green, the urgent thumbnails, the constant noise. It can be completely overwhelming. Investing feels exhausting, doesn't it? But what if I told you that real lasting wealth isn't built in that chaos? It's usually built quietly, consistently, and calmly, far away from the daily drama. Today, we're going to shut out the noise and build a blueprint for becoming a calm investor. One who builds wealth without losing their mind. First things first, before you even think about picking a stock, a fund, or a crypto coin, you need to decide on your destination. Think of your money like an employee. You have to give it a job. What is this money actually for? Is it for a house deposit in 3 years? Your kid's education in 10? Or is it for your financial freedom decades from now? If you don't know the specific job of your money, every single price swing, up or down, feels like an emergency. When you have a clear destination, a 5% drop doesn't mean I'm losing money. It just means the path to my 10-year goal got a little bumpy today. Knowing the destination is the foundation of calm. Principle number 2, own a strategy, not a story. The investing world is full of exciting stories. This tech stock will change the world. This new coin is the future. Chasing these stories is a full-time job, and it's exhausting. Calm investors don't do that. They choose a simple, understandable strategy and stick with it. This often looks like a basic mix of broad market index funds that cover thousands of companies, maybe some bonds for stability, and a cash buffer for emergencies. The exact mix depends on your country, your goals, and your age. But the key is simplicity. Complexity is not a guarantee of better returns. In fact, it often just leads to more confusion and more opportunities to make mistakes. A simple, consistent strategy you can stick with is almost always more powerful than a complex one you keep changing. Next up, a truly powerful tool for calm: automate the boring stuff. One of the biggest sources of anxiety for investors is the constant question, is now a good time to buy? Calm investors remove that drama from their lives by automating it. They set up regular, automatic contributions to their investment accounts every week, every 2 weeks, every month. It happens like clockwork, regardless of what the market is doing. This is a concept called dollar cost averaging. When prices are low, your fixed amount of money automatically buys more shares. When prices are high, it buys fewer. Over the long run, this simple automated process smooths out your purchase price and, more importantly, it removes the emotional guesswork. You're no longer trying to be a market genius. You're just consistently showing up, rain or shine. This leads us to a crucial principle: set your own do-nothing rules. The biggest threat to your long-term investment plan is often your own short-term emotions. We're all human. When we see our portfolio drop, our instinct is to do something, anything, to stop the pain. Calm investors know this, so they create rules to protect themselves from their own worst impulses. Your rules could be anything that works for you. For example, I will not sell anything on a day the market is down more than 3%. Or maybe, I will only check my portfolio on the first Saturday of the month. These aren't market rules. They're personal behavior rules. They create a critical gap between an emotional trigger and a financial decision, ensuring that temporary moods don't lead to permanent and often regrettable choices. Rules beat moods every time. Okay, let's talk about the news. Principle number 5 is learning to separate news from noise. Financial headlines, TV segments, and YouTube videos are designed for one thing: to get your clicks and attention. Fear and greed are the easiest ways to do that. Market in turmoil. This stock is set to explode. But here's the secret: 99% of that is just noise. It has nothing to do with your personal, long-term financial plan. A calm investor develops a filter. When they see a scary headline, they ask themselves one simple question: Does this new information fundamentally change my plan for reaching my 10-year, 20-year, or 30-year goals? Most of the time, the honest answer is no. It's just another blip on the long-term chart. Your plan is the signal. The daily headlines are the noise. Learn to tune out the noise. Principle 6 is all about self-awareness. Protect your sleep with a risk level you can actually handle. You might see people online bragging about their all-in high-risk portfolios. You might even run the numbers and see that a riskier strategy could theoretically lead to higher returns. But none of that matters if the normal ups and downs of the market make you feel physically sick and keep you awake at night. The right amount of risk isn't a math problem. It's a personal, psychological one. It's the level where you can experience a market downturn without panicking and abandoning your entire strategy. If you're constantly stressed, it's a sign you've taken on too much risk for your personality. Your portfolio should be built to help you sleep soundly, not to give you nightmares. And that brings us to our final, and perhaps most important, principle. Focus on time asterisk and asterisk the market, not asterisk timing asterisk the market. Everyone dreams of buying at the absolute bottom and selling at the absolute top. The reality is, almost no one can do this consistently. It's a fool's errand. Trying to jump in and out of the market often means you miss the best days, which can devastate your long-term returns. The real advantage of a regular investor isn't being smarter or faster than everyone else. It's patience. It's the power of staying invested, letting your money compound year after year through the good times and the bad. The goal isn't to perfectly guess the next week or month. It's to stay in the game for the next decade. Remember, this is for educational purposes and not personal financial advice. But if you want to build wealth without the obsession, think less about timing and more about time. So let's put it all together. You don't need to be the smartest person in the room to succeed at investing. You don't need to predict the future or outsmart the market's every move. You just need a simple plan that you can calmly and consistently follow for a very long time. A plan that lets you close your laptop, go for a walk, and live your life, confident that your money is quietly working for you in the background. If that sounds a whole lot better than the endless cycle of panic and noise, then you're on the right track. Thanks for watching, and if you want to keep learning how to build wealth without the stress, make sure to follow for more.